Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about the taxes that you could potentially have on your investments. Most of you are familiar that if you buy stock and you sell it, then you will have capital gains tax. At least I hope the majority of you are aware of that. But there are some times when you don't necessarily sell your stock that you will have some tax implications from your investments. I got Andrew McMillan here with me today to talk about that. Andrew, what can you tell people to kind of look out for in this area?
Yeah, something that we kind of catches people off guard a lot of times during tax season when we've gotten their tax return done and they owe some money and they're like, man, how do I owe money because I didn't sell any of my investments? So even if you don't sell any of your investments in stocks or mutual funds or other holdings that you might have that are invested in the market, you still may owe tax on that, and a lot of times it's because of dividends that you have received from those investments, but you have chosen to reinvest those dividends into more stock. So that happens almost always without you, the taxpayer, even know it's happening. I mean, it's probably something that, you know, on the front end when you first invested in that stock that was set up, but if you are invested in a stock that pays dividends, sometimes they pay them quarterly, annually, it just depends on the holding. But if those dividends are being paid to you, that's a taxable event. Whether or not you reinvest those dividends into more stock or not is really irrelevant from the tax side of things. That's still going to be a taxable event for you. So the IRS really kind of views it as a two-step process. Like step one, you receive the dividend, taxable event. Step two, you've decided to reinvest those and buy more stock. So that's just increasing your investment. That doesn't necessarily help you out from a tax perspective. So when it comes time to file your tax return, you get your 1099 statement from your investment company that manages that account for you, and you could potentially have dividends on there that are taxable to you, and you didn't even receive the money, or you don't have the money. Technically, you received it, but you chose to reinvest it. So it can feel like you're paying taxes on something that you don't even have, because that's kind of essentially what you're doing from a purely cash flow perspective. But it's always just important to understand what you're invested in so that you don't get caught off guard. So we see it a lot with dividends. It also can happen with like capital gains. And then obviously where they sell and it's just kind of reinvested. So if you have somebody managing that fund for you, just definitely make sure you know what's going on. It's always helpful, you know, in the fourth quarter to take a look at your investments, see how they're performing, see what potential tax implications may be coming due, because you know, you got some time to do some tax loss harvesting. I think we've done some videos about that in the past, but there's some things you can do to help manage that investment tax liability, and it's worth looking at definitely before the end of the year.
Awesome. Well, that's really good information, Andrew. So if you have investment income and you have questions on the taxation of that income, feel free to give us a call and we'll help you out.